and then we'll go into I'll ask you questions like, okay, so what exactly do you trade, and how do you do it, and when do you even have the time? Okay. I'm gonna ask, what kind of technique are you using? Technical analysis? Are you using value based? Are you using momentum investing? Like, what are the different types of analysis? And you can just quickly talk about the different types and why you chose technical. And then what exactly do you trade? Do you trade options as well? Do you trade Forex? And do you trade futures? Like, what are the different things, and why do you don't do them, and why do you do them?
How's my financial health, Doc? Welcome to the Financial Literacy Podcast for Healthcare Professionals, where financial security and wealth topics are not a taboo.
So welcome everybody back to the How is My Financial Health Doc podcast, and I am your host, Vuket Tran. So today I have on the podcast a friend of mine. You've met him before, or you've heard him before, and his name is Dr. Roger Sen. Dr. Roger Sen is a peer. Actually, he's a family doctor who lives not too far from me, and Roger has been pressuring me to go play golf with him. Obviously, because he knows he's a better golfer than I am. I've played golf 5 times in my entire life, so I know he wants to win. So that's why he's been asking me to play golf. Roger, welcome to the show.
Oh, thank you, Vu, for having me on. It's been a pleasure being on with you before, and I look forward to talking tonight about investment.
Perfect. So that's why we're here tonight, because Roger, I don't know if you guys recall how we met. So we met on LinkedIn. Sort of like Tinder, but for doctors, you know. So we met on LinkedIn, and we had long discussion about, you know, investment and pensions and all that. And then Roger revealed that he is an investor. He trades. He trades funds and stocks and options and things like that. And I got interested. And then one day he showed me his 2 screens. Is it 2 screen or 3 screens, Roger? I forgot.
Well, including my laptop is 4, but
4 screens.
There's 3 large, huge screens. Yes,
that's right. I remember the 3 large screens. I didn't see your laptop because obviously you were on your laptop, and all I saw were these, you know, graphs, you know, with blue and red. Sorry, with green and red, and all these graphs. I'm like, oh my God, Roger, are you a doctor, or are you trying to finagle the market here? What's going on? So we talked about, you know, investing, day trading, and stuff like that. So, Roger, tell us a little bit about, you know, your professional life. What do you do? And then we'll jump into, you know, this passion of yours. We'll talk about, you know, what led you to this.
Oh, okay. So, to introduce myself, so I'm a family doctor. I practice in Vaughan right now, and my primary core vocation is the practice of medicine. I did emergency for a while, and now shifted into primary care. I run a clinic in Maple, Ontario, and I'm happy with it. And that's what I generally do. And investing was something that I left to the professionals to do, meaning wealth managers, certified financial CFAs, and financial planners and financial advisors. But at a certain point, a few years ago, I took over control of my own finances and decided that this is something that I want to do myself. And I developed a strong passion towards learning. And that's why I'm here today.
So tell us a little bit about how did you discover this passion? What happened? What was the trigger, the impetus of you, you know, falling into this passion? And I'm assuming, like all of us, you were, you know, studying to be a doctor, becoming an emerge doc. So how come all of a sudden you're an investor? And I'm not talking about investor like everybody else, very passive. Buy some mutual funds and I bought it with the bank. No, you're doing more than that. So you actually have three big screens with graphs on it. So what triggered that?
So, I guess, Vu, what would bring me back to the triggering event would be really the COVID market crash of 2020. I think that just like a lot of us doctors, we are too busy. We hand over our finances to professionals, and the COVID crash was a wake-up call. It was an eye-opening call for me, or myself and others. We saw a lot of our portfolio evaporate. We went down 30+%, and this took me as a shock. This was something that came as a complete surprise because I thought that diversification and all the things we talk about are risk mitigation against this kind of thing. But in a market crash, nobody is protected, and not the professionals, not the experts, nobody. And so I started my journey. I said, now I'm going to take control of my finances. And another thing that I should also point out is that after looking at my portfolio very strongly now, whereas before I think not unlike a lot of doctors, we hardly look at our portfolio. We just basically give it to our money managers, and maybe they call us once a year to review, maybe they don't. But we like to practice medicine. We don't want to be bothered with it, and it's growing, and we trust them. But then after the crash, not only did I question why wasn't I risk mitigated, but also what are the returns on my portfolio? I found out that actually most of my portfolio was heavily underperforming the market. So if I had just gone out and just thrown my money into an index fund, such as the S&P 500, which is the top 500 companies in the world, I would have done a lot better than having a money manager manage my money and pay him professional fees for managing it. So that triggering event caused me to start looking deeply at my portfolio, and then to search and to find out exactly what this whole investing thing was. And so therein I started to research. I was working through the day as a doctor, like all of us, slugging it out, seeing patients, looking at reports, doing reports. But the time that I had at night, the few hours that I had, I would spend online, taking an investment course or reading a book and trying to educate myself. And this was a process that I went through. And it ended up with me eventually coming to the point where I actually said to my financial advisor, you know what? I think I'm better off doing this on my own. And that's where I took over my own portfolio at that point.
Okay, that's a cool story. So I have some questions coming out to my mind then. How is what you're doing different from DIY, just buying S&P 500, or just buying a QQQ, which is the NASDAQ, or just buying, some index fund, huh? Because most of us, they say, if we do it on our own, we're not sophisticated. I'll buy some index funds and I'll buy and I'll hold for the next 5 years, right? So that's typically what we do. So how is what you're doing different, just so that the audience understand a little bit?
Okay, so now, first of all, what I'm doing, let me say, first of all, that most people should not do, because it is more speculative and it's not passive. So the most likely thing that DIY investors do is they would buy an index fund and they would just hold on to it, and that would be the end of it. Maybe a few index funds to diversify a little bit, an ETF, an exchange traded fund where there's very low MER. But in my case, when I looked at the research and I looked at what traders were doing that were active traders, I wanted a higher rate of return. I wasn't happy with an index fund rate of return. So if I wanted to have a higher rate of return than an index fund, I would have to know what professional traders were doing in order to achieve their rates of return. And the rates of return for professional traders who do short-term trading. Now, a short-term may be intraday. You buy and sell stock within 1 day. Or a short-term, maybe you hold the stock for a few days to a few weeks. That would be a swing trader. Or you hold a stock for a few months. That would be a position trader. Or you may have somebody that holds the position for years, and that would be a long-term investor. So the increase in profitability goes higher the shorter you hold your position. The longer you hold your position, the lower will be your return. So in my mind, I wanted to learn what the greatest traders do to make the most amount of money. And that's where I dived into the analysis of how you can achieve those. And I looked at fundamental versus technical analysis.
Okay, so let me just unpack that a little bit just for the audience. I mean, I absolutely understood the terms that you were using, but the audience may not. So if I'm buying this morning and selling this afternoon, I'm day trading. This is day trading. And there's higher risk, obviously, right? There's lots of variation during that day. And so if I'm buying in the morning, selling a minute later, or selling in that same day, I'm called a day trader. I'm day trading. If I'm buying today, but I'll keep it and wait till it's proper and it's great, and I sell it 2-3 days from now, even within the week, I call that a swing trade. If I buy it today and I'm waiting for the market to be where I want it to be, and then it's going to be, let's say, 2-3 months from now, I'm not too concerned. You know what? I'm not stressing about it. I'm going to sleep and I go about my day and do my work, and I sell it in 2-3 months. I'm a position trader. And after 2-3 months, we're talking about long-term investor. Most of us are familiar with long-term investing, right? We buy an S&P 500, we buy a Shopify, we buy a Tesla, and we've been told to hold at least 3 to 5 years. So that's what we typically do. But no, you play in the more short-term day trading, swing trading. So I hope people understand the difference. You mentioned as we keep the stock or the asset longer, then it averages out. The performance or the yield is not as good as if, I made 1% this morning, right? One day I made 1%. So the reward is obviously higher, but more risky. And obviously one needs to understand what that means. And you brought up 2 words. One is technical analysis. The other one is called fundamental analysis, which is sort of like value-based investing. And then there's a third one called momentum, but we'll go into that in just a minute. So just describe your day to us. What does your day look like? If you're day trading, you still have to go to your family practice. So describe
Yes.
what would a day look like for you?
Okay, so for those that are aware, the New York Stock Exchange, which is the largest exchange in the world, and that's where most of the day traders actually trade on. I mean, there are other trading, but it is the largest capitalized market and the largest basket of stocks in the world that are traded. It opens at 9:30 a.m. and it closes at 4 p.m. So what I've done is I've set my office schedule such that I start a little bit later. So I would start my office work at around 10:15. So that allows me, when I get up in the morning, to actually prepare and be ready to actually see the New York Stock Exchange open so I can see the prices of stocks as it's happening in real live time. And so I can take a position on a particular instrument, a stock, before I actually start working. And then once I take a position, I can actually leave it, do my work as a doctor, and I can check the stock a few times during the day on my iPhone, because you can download an app where you can see the stock prices of any stock in the world. And then I can basically decide whether I want to keep it or I want to sell it. So that's basically what I do. It's more swing trading through most days. Now, some other days, when say I've got a 3 hours of extra long time, I can open when the stock market opens. I can be there. I can do a day trade, be in a stock by 10 o'clock in the morning and be out in an hour and a half by, say, 12 o'clock. That's intraday trading. That's day trading. And I would have made all my profit for the day. And that's it. And then I can go to my office in the afternoon, or I can go golfing in the afternoon. If it's summer, which I love, which I'm trying to get Vu to come. But that's basically how my days are for trading. And this is between Monday to Friday. I've set my schedule up.
Very good. That's a good description. At least I think people understand what's the expectation of how to set up their day. So in your mind, if you're doing a day trading, so I'm starting at 9:30 in the morning, I have my coffee cup and I'm looking at the stocks start their day. What would be for you a good return on a day trade? Is it 1%? Is it a 0.5%? Is it 2%? Like, what is on average a good day for a day trade?
Now, it can be explained. This answer can be explained in different ways. It's not uncommon for you to make, you can sometimes make between 100 to 200% on one trade in one day.
That's significant.
Now, that's not going to be from large capitalized stocks, like, for example, IBM or Microsoft or Apple. That's going to be from more speculative stocks from the small cap market,
right,
or the micro market, where they're capitalized very low. The companies are small and there's more speculation. They don't maybe make as much money or make any money. They may be in a loss, but people are speculating that this may be the winner, that this company may be the goose that lays the golden egg, and you can retire. So what you're doing is you're looking for those kind of plays. And every day there's always a few. And what you're doing actually is looking at the emotional aspect of the market. Where is the crowd gathering? Where is the unsophisticated investors who think they're going to retire? Where are they putting their money? And so what you're doing is you're trying to find that crowd. You're trying to find that speculative stock, and then you're going to ride it. Because the emotion only lasts for a few hours. By then, the elation has evaporated, and you would have gotten out of that position and left everybody else holding the bag while you've profited.
Okay. So that's day trading on speculative small caps and sometimes mini caps. But if you're doing swing, you may be looking at bigger caps or medium cap type of thing. So you mentioned emotion in these types of assessments. So let's talk about what you mentioned earlier: fundamental versus technical versus momentum versus value-based. So what are the difference between each of them? Now, I know you use technical analysis, but you also described to me the momentum analysis in just example that you just mentioned. So in fact, I think you use a combination of both, or depending on the stock. So let's just talk about fundamental, talk about momentum, talk about technical, and what value-based mean. Let's go through that.
Oh, okay. So let's just separate the two broadest categories, which is fundamental versus technical. So this has been the age-old argument between the two groups as to which is the more effective way to manage money. So just to explain again for listeners, fundamental is traditionally what we were, or whatever you've heard about, you evaluate a company based on their financial metrics. So you look at their earnings per quarter, you look at how many shares there are, you look at their potential based on their performative. So how much sales are they getting? What their revenue stream is? What they're doing in terms of research or development, what new products do they have in their pipeline, what are the analysts doing, what are they saying about the stocks. So then you come up with a target price. So the stock may be trading at $100, and after your analysis you say maybe it can go up to $150. in about 6 months to 2 years or whatever. That's not bad. 50% increase over a year or two. That's great. Comparatively, the index is doing maybe 8%, the S&P 500. So what you're looking at is basically a really rational, analytical way of evaluating a company and its worth. And then the price that you're targeting is based on future earnings, the present value of future earnings. So you're speculating in a way what it may be in about 5 years' time, or 4 years' time, or 3 years' time. So there's a bit of art to it as well. Now, technical analysis is completely without any metrics of what the company's performance is. As a matter of fact, what I do when I buy stocks based on technical, most times I don't even know what they do. I just know their ticker symbol. They could be XYZ, they could be ABC. A lot of these companies, I have no idea. All I'm looking at now is technically, where do they fit in my technical analysis? So technical analysis is looking at metrics which measure the price of a stock and how much the price has gone up, how much the price has gone down, how much acceleration of the prices over a given period of time. It uses technical indicators to cut up, dice, and slice the performance of a particular stock on its price movement, whether it's up or it's down. There's over 150 different mathematical ways to analyze, if not more, the price movement of a particular stock. And so some are more popular than others. So what I use is technical analysis to find out those stocks that are moving very fast. And that's called momentum investing.
So let me just unpack a little bit. In the fundamentals, as you mentioned, is quite a bit of work. I need to understand what this company does, what it produces, who is the CEO, what's the management team, what was their past record, what is their current strategy, what is their strategic plan over the next 4 years, how are they strategically competitive to other companies of similar service or product, and then I determine whether it's worth me putting $1 in today, hoping that it will become a $5 tomorrow. So that's fundamental. I need to know all that about the business. Technical, like you say, I don't even know who the CEO is. In fact, I don't even know if they produce a widget or they actually sell gasoline. I have no clue. I just know that this company is moving in this particular way today. And it has moved in this particular way this week. And it has in this particular way this last month. And this last year, it has moved in this particular way. And now I'm using all the tools that I have in my technical analysis to say, tomorrow it's going to move X way. And I'm going to make a decision whether I'm going to go long or I'm going to go short. And we'll talk about what that means. So in technical analysis, is really looking at the movement of the stock without understanding anything about the company. In fact, we don't even care about what the company does. Momentum is, well, I see a momentum. This company, this stock is moving in this direction rapidly, quickly, significantly. I'm going to jump in to take advantage of that momentum. Again, whether it's for the long or whether it's for the short. And so examples of momentum, and I remember people remember this, AMC, EB Games. What was EB Game? GameStop, right? Mm-hmm. Those were momentum. Everybody was buying. So people were buying, and then we stopped buying and then everybody sold. And so if you bought when people was buying and you sold when people sold, that's great. But if you bought and you kept it when people sold, then it's not that great. So momentum trading is looking at various significant rapid change in movement. So let's dive into the last one, which is value-based. And so value-based is really a fundamental analysis, but looking at undervalued stock. And so I think that, I don't know, I'll just pick an example. Stock X is worth $5 today. But you know what? I think people are undervaluing it. People don't see the value that I see. Today is worth $5, but I think it's actually worth $7, right? So if I buy it today at 5 and actually becomes 7 because everybody realizes what I've been realizing forever and the price went up, then I just made $2 on that stock. But value base is typically looking at a stock that is undervalued by the market right now. And I think I'm going to get what I should get when people realizes that it's worth more. So when you do technical analysis, let's just dive into that. That's what you use more frequently. Tell us why you chose that and how you came to that, and what are the different learnings that you had to go through to understand all this.
Okay, that's a very good question, Vu. So initially, when I started my journey, I actually started to look at fundamental analysis because that's what traditionally we were all taught, or I was exposed to, was I should learn a lot about the company and I should learn a lot about the metrics and understand how to read balance sheets and how to understand how to read income statements and cash flow and EBITDA and all these terms that they use for these kind of statement analysis. And then I said, let me look at technical analysis because I actually like the looking at charts. And if you've ever seen a stock chart, it's composed of these candles. And there's red candles, as you mentioned, there's green candles. Red candle simply means that the stock price is going down from the opening and closing at a price lower than its opening price. And a green candle means that basically it finished closing the day at a price higher than its opening. But what's very interesting that when you look at these charts, you don't need to know anything about the company. And I realized that this is something where if you're good into sort of trends, understanding a trend, and we've all done this in our background as doctors, we look at graphs, we look at charts, we try to understand values, we know about the bell curve. Stocks charts operate the very same way. It's actually in our alley. We're actually very good technical analysts, all of us. We all have it within us, but we just haven't been given the tools to understand it. So what I realized is that stocks trend, and you don't need to know about the stock, the company, to make profit from that trend. And so then I started digging deeper into what is technical analysis. And I found out that I'd rather be looking at trends than be looking at undervalued stock, because the simple reason is that when I look at an undervalued stock, I may be right, I may be wrong, maybe it's a good bet. I'm beating other people that when it goes up, they're going to be buying at a higher price. But here's the thing. When is it going to go up? There's an opportunity cost. So should you sink your money into something that may take 6 months to go up, a year to go up? How long do you keep this? And then in that time period where you've sunk capital into a particular position, could you not have put it in another position that's already going up? So when you start asking these kind of questions, and that's assuming that it goes up, it may never go up. It may actually go down because the market is very fickle. When I started looking at that, I thought, you know what? It's a lot less work to actually go technical analysis. It's a lot less work. And there's actually less risk. And the chance for profitability is way, way more than if you do a traditional value investing and buy and hold investing. So I started looking more for technical analysis. And so then I started searching on, as to where can I learn this? There's a lot of information out there on the web, lots. You can go from one site to the other. There is technical analysis schools that can teach you how to do it. In my journey, I was very fortunate, very, very lucky that one of the first traders that taught me was the one that I stuck through in my whole teaching. And I just happened to come upon this particular trader who's a Canadian, who's been doing it for many, many years, over 30 years. He lived in Alberta, and now he's moved to Kelowna, BC, enjoying the great weather. And he loves to teach. And so I started to follow his teaching, and I would be there every day listening to him. I read his book. I read his blogs. I watch him actually when he's trading. He gives criticisms. He has a course where he takes you as a mentorship through the program. He gives you not the just technical analysis, but the art of trading, the art of technical analysis. And what people don't realize is that there's a huge emotional component to trading. We haven't touched upon this. Once you learn the rules, it's not enough. You will still mess up. And believe me, I have when I started learning. It's because you have to take the emotion out of trading. And when you're looking at charts and stocks in front of you and you're seeing prices move up and down, believe me, your brain, your amygdala, that fear and flight part of your brain will be activated. And you can throw all those rules out the window because you're going to get emotional. And so I learned for this trader how to take the emotion out of trading, and also what the rules of trading are according to his approach. There are many different approaches to technical analysis. You can use many different indicators in technical analysis. I told you there's over 150, but I use very few indicators. It's very simple the way he's taught this program to me. And so I've stuck with him in my journey. And at this point, I'm comfortable enough after several years of learning, watching, doing, that if I had to, I could leave medicine as a profession and just be trading.
So what you just said there is powerful, right? You've developed the skill to the point where you can say, you know what? I'm done with medicine. I'm done with family medicine. I'm done with clinical work. I'm at a point where I can start doing day trading, swing trading, position trading, and I'll be fine. Now, this is not the podcast for it. This is not what I'm telling people. Please, people, don't quit your job today and say, Vu told me to go do day trading. That's not what I meant. That's not what this podcast is about. This podcast is about letting people know out there, our peers, my colleagues, your colleagues, to say, listen, if you have a passion for a side gig, go and do it, right? Life is short. But you never know. At some point, it may become a source of revenue. And for Roger, it can become. And you know what, Roger, I think at some point, you and I will just be going golfing and I'll let you win every single time. That's not a problem. But you know what? You don't have to think about your clinic anymore. I mean, you are to that point. I'm at a point where, you know, I don't make enough money through the my financial coaching, but you know what, at some point, who says, right? So the point that I'm trying to make here is that we all have passions inside us, and it is the time to develop them, and it is the time to look and straight into a passion, look into the eyes and say, what can I do with this and how can I do it? And even if it doesn't make money, it takes you away from that burnout. It takes you away from that daily grind. Thank you very much, Roger, for sharing that. Like, you have achieved to a point where you can actually do that. But you're still a doctor and you chose to stay a doctor, right? And that's a choice, not by force, but by choice, right? And that is very important. So I want to come back to the two words that I used, long and short. So when you look at technical analysis and you see the red candles and the green candles, what does short mean? What does long mean? What do you do? Do you short? Do you long? What is your favorite game?
Okay, I'm glad you asked that. So just to define long for your listeners, Vu. So long means that you're purchasing a stock with the expectation that it will go up in price. And eventually at some point, when it goes up in price, you're going to sell that for a profit. That is going long. So going short means that you sell a stock with the intent that you will make a profit when it goes down in price. So, which is completely opposite to what we're traditionally accustomed to. We're accustomed to long. We're not accustomed to doing short. Now, with any sort of stock trading, whether it's technical analysis or fundamental, you can make money either way. That's the beauty of the stock market. For as many people that believe that the stock is going up, the other side believes it will go down. So basically what this is a tussle between the market bulls and the market bears. The bears believe it's going to go down. The bulls believe it's going to go up. And ultimately, who wins is the real question, whether you're going to make money or not, and which way you bet. It is a bet, but it's an educated bet.
Short means that you're making money as it goes down. And so, you know what? For the unsophisticated investor, i.e. me, Vuket Tran, when the market goes down, I go hide in a corner and I cry, right? But for a sophisticated investor, i.e. Roger, if he's shorting and the market goes down, Roger's throwing a party. So there are two ways to play this game. You can play the long game or you can play the short game. And you just need to know what you're doing. And again, part of it is bet. Part of it is education, educated decision. And part of it, and I think, and you would agree with me, I think the big part of it is to how to handle your own behavior and the emotions inside. So worst, I think, is greed. I tell you, I've suffered through that too. Made bad decisions because of greed, and I've made bad decisions because of fear. I've made bad decisions because of loss aversion, like all sorts of human behavior that must be controlled when we play this type of game. So it is definitely an art, Roger, definitely an art. So now let's talk about what you invest in. Like when you're, okay, you have your coffee, you're sitting in front of your computer. Tell us concretely, what is it that you're investing in? Are you investing in index, ETF, individual stocks? Are you investing in bond funds? Are you investing in options, Forex, futures, crypto? Like, what exactly are you doing?
Okay, so let me tell you what I'm doing now, which may be different than what I was doing before. So because I'm a momentum investor, I'm going to be waiting for momentum to happen. So which means is that a lot of the times I may just be sitting in cash, waiting for when the opportunity strikes, and then I lit the fire and I let it go. So at one point, I was 95% cash when the market was in a bear market. And now maybe I'm in about 10 to 15% stocks and about 85% cash, because I've started to go into certain positions. So what am I going into positions? So I buy stocks, usually individual stocks. I buy ETFs, exchange traded funds, which is a basket of stocks based on a particular index. I also buy options, which is another topic, another financial way to make money. I also buy cryptocurrency, which for me is very exciting, but I know for others it may cause fear and anxiety because of its volatility. I do all of these things. So what am I doing right now? Well, if I'm, say, for example, I'm day trading, I may look at a company that's in the biotechnical field. Biotechnical stocks are very commonly speculative. We don't know, they may come up with a new drug. Some news comes out where they passed phase 3 trials. Some good news has come, and then everybody speculates that this is going to be the next Viagra or something that Pfizer came up with. So that would be an example of a day trade. I may buy a stock for a swing trade. Maybe a stock in, for example, right now, what's going up in terms of mid-cap stocks. There's technological companies that are going up right now. So I'll buy maybe a larger position because I'm going to hold it for a little bit longer. And that'll be like going long. So I'm going long in both these positions. Or I may buy, say, an ETF on an index, let's say the XLE, which is the index fund for the energy market. It's a basket of energy stocks. Because oil now is going up, it's pulled back for the past year, meaning pullback means technically the price has peaked a year ago. Sellers sold the stock for the past year, and the price has been driven down. And now the buyers are coming back, the bulls, to maybe push it up again. So I may buy an XLE ETF, a basket of energy stocks, and bet that now the momentum is swinging the other way and it's going to go up. And I want to get it at the bottom. I may also buy an option, which is another thing that you can do. You can buy not the actual stock, but a derivative of the stock. And that's another way of speculating and making money, is buying options as well. So that's what I'm doing.
Very good. So you're trading all sorts of things. The only thing I didn't hear is you weren't trading hockey cards. I have lots of hockey cards, so you want to trade that. But joking aside, let's come back to the different types of assets that you can trade. And you've mentioned all of them. I don't want to go into a long podcast discussion of what are options. We can have another episode on that, and we'll again pick your brain for some more expert content there. But just in maybe one or two sentences, what are options? So I understand that option is like buying insurance in the stock market. So can you just unpack that a little bit in maybe one or two sentences, just so people know what it is? Because it's uncommon. We don't typically buy options. We buy stocks and bonds and ETFs and stuff, but there's such a thing as an option. So what is it exactly is that?
So an option is a contract where you can buy shares of a particular company without actually buying the company itself, the shares of the company. So it's a derivative. So what you're doing is you're purchasing a contract with the option, but not the obligation, to buy or sell a particular stock. So I'm going to try and unpack this. There's two types of option contracts. There's calls and there's puts. So very simply, if you buy a call option, you're betting that the stock price will go up. If you buy a put option, you're betting that the stock price will go down. And so there is many advantages to actually buying the option of a stock and not the actual stock. And it actually enhances your ability to insure and protect yourself against loss, or you can be completely speculative and use it as a speculative play.
Okay, thank you. That's all I think we're going to talk about in terms of options. But for the audience, what that means is there's more than just stocks, bonds, ETF, index. There's crypto, there's options, there's futures we didn't even talk about, and we're not going to go there. And there's also Forex, foreign exchange, which we're not going to go there. Now, you also mentioned the New York Stock Exchange. This is North American. Obviously, when I'm awake, I want to be awake, and the stock market is awake. But for all of us who do night shifts or who do shifts, we could actually play in the UK stock market. Nothing says that we need to stick to North America. So if I wanna trade in the UK, then I'm awake at 5 a.m. Or if I want to play the Asian Pacific market, Hong Kong, Hang Seng, play in the Japan market, then I'm awake the other 12 hours of the day. And so that's what the traders do, right? They play different markets depending on what they like and what type of stocks they want to buy. Among our peers, who do you think are the best people in terms of mindset, in terms of qualities? Who are the best people to be doing this type of trading? I'm not talking about buy and hold for 5 years. I'm talking about day and swing trading. What does it take? What does it take to be a professional like yourself?
First of all, you have to have some ability or tolerance for risk taking. if your personality is not one of a risk taker, if you're the conservative type that you like to put more in cash, in bonds and fixed income instruments, you rather know that you may gain 1 or 2 or 3% or 4%, and that's okay with you, but you also won't lose more than that probably, then this type of investing is not for you, because there is speculation and there is risk. Even though I would make the argument that the risk is less than actually buy and hold.
Okay.
And I would make that argument, the risk is less, because when we do momentum investing or technical analysis trading, we actually set a floor for our loss.
Correct.
We do
Set a
not.
limit.
We set a limit. And whether I'm buying the actual stock or I'm buying the option for that stock, I set a limit. I've defined my risk already. And my risk generally is only 1 to 2% of my portfolio. So if I take a hit and I take a loss, not a big deal. So the type of person that would invest in this is one who is okay with some risk, and two, volatility. There's a lot of volatility. Prices are going up and down. You're watching this thing very closely, and you have to be emotionally okay with that. It's not like you can close your eyes and let somebody else handle your money. You actually are in it and you own it. And so if you're not the type of person that can take volatility or change, then you should not be in this position. And you should hand it off to somebody else to manage your money. And third, you have to be technical minded. You should like charts and you should like numbers, and you should be able to understand trend patterns. I think most of us, as our background, are good at that. That's my personal opinion. And we're into math, we're into numbers, so we understand percentages, gains, these things, trading volume. We understand these things. And other thing is, emotionally, you have to be very good. We are able to emotionally control. Most of us can emotionally control ourselves. That's why we're doctors. We can have that kind of intellectual part of it, but also we can control our emotion as well. So if you're an emotional person with a labile personality, this may not be for you as well. No matter how much you trade, you still may not be able to. And that's why it's a select small amount of people that actually end up doing this.
Very true. Very true. Now, a lot of the things can be taught or we could read, but again, controlling your emotions, that you cannot be taught, or it's harder to teach that or to learn that. So listen, Roger, this was a really, really good discussion. And again, the purpose of this podcast is just to show another side of a doctor. I see a lot of my colleagues, they seem like they're stuck. They seem like they're in a rut. And what I mean is, if I'm not a doctor, who am I? What do I do? Right? If I'm not a doctor, I'm a nothing. I can't do anything else. That's not true. We have a lot of skills through our medicine that could be applicable to so many other things in life and to so many other type of professions. And so I would encourage everybody to look broad, look within yourselves, go with your passion and develop that passion. And one day, maybe you'll be able to monetize it and make another revenue stream, whether it's a side hustle, a side gig, or it becomes a full-time job for you, then that's great. But please think about developing your passion, because we live in a very, very difficult time, Roger. You know that. Very difficult in the healthcare system in Canada right now, and even in North America. And a lot of our colleagues are burning out. So having that extra passion, driving for that extra passion, looking for developing it is extremely important. Would you agree?
Oh, 100%. I would agree, Vu. And one of the other reasons also that led me to this venture, which you've mentioned over and over, is that I have an out. I have an out. I have a way that I can make money outside of my medical profession, if I had to. So I don't feel that I'm constrained.
Very important. Having an out or developing it now.
That's correct.
Please don't get me wrong. I'm not asking physicians in Canada or even in North America to stop practicing medicine. In fact, I don't think I started that trend. Most have already heard that physicians are leaving the profession in droves, and this has started in the US and has started in Canada and also in Ontario. I read today that there is 2.3 million Ontarians without a family doctor, and this is today, July 2024. So definitely I'm not advocating for physicians to leave their profession, but it's something to think about. How do you stay in your profession, stay refreshed in your profession, wanting to continue your profession when you're burnt out? And so it's something to think about, and how to re-energize yourself. And this is just another way of doing it. When I said another way, I don't mean to throw yourself into stocks and bonds and options. I mean developing your passion and run with it and play with it and enjoy it, so that when you are actually practicing the medicine, you are now refreshed. And speaking about passion, you all know that I have a passion for education. I am still offering financial coaching to individuals and healthcare professionals who want to learn more about the overall personal finance. And I'm also offering coaching for executive and leadership coaching and personal coaching for those of you who are either transitioning upwards or laterally, or want to just simply improve your personal skills and develop self-capacity and self-awareness, so that you empower yourself to be the better version of yourself in the future. And this hopefully will also help you fight burnout. If you want to reach out to me, please email me at hmfhd2020@gmail.com, hmfhd2020@gmail.com.
How is My Financial Health Doc podcast is hosted by Dr. Vukit Tran. Dr. Tran is a physician with a special interest in personal financial security and wealth education. Dr. Tran does not render or offer to render personalized investment or tax advice through this financial podcast. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. Please confer with your advisor, lawyer, or accountant for specific advice.